Morning. Good morning, everybody. Just wanted to come out and say that we believe the long national nightmare will be over tonight. It was completely and utterly foolish and pointless in the end, as we said all along. I just want to apologize to any Americans who are out there who still have flight cancellations or delays today. I want to apologize to the many American families who were made to go hungry over the last several weeks, our troops and other federal employees who are wondering where their next paycheck would come from. All of that's on the Democrats. Just never forget, they voted 15 times between the House and the Senate to close your government. And the Republicans tried every single day of the shutdown to open it. And we voted 15 times to do that. They have a lot to answer for. And I just want to say that we're very optimistic about the vote tally tonight. We think this is going to happen. And we're sorry that it took this long. So Republicans are going to deliver for the people. We're ready to get back to our legislative agenda. We have a very aggressive calendar for the remainder of this year. There'll be some long days and nights here, some long working weeks, but we will get this thing back on track.
So as the U.S. government shutdown comes to a close, virtually nobody cares if politicians get paid during a shutdown. It's the important jobs like air traffic controllers that matter. Well, the crypto market over the past week has done pretty good. Now, when they started to announce that the shutdown would come to an end, we saw a lot of projects crash, 5, 10, 15, 20%. And I uploaded a video a little earlier today, so I'm actually making another one right now because I have some very important stuff to cover with you guys over the next few minutes. But we talked about XRP selling off because of what we were seeing on the charts, and it's absolutely hilarious. The type of comments that I get on these videos, like this one right here, saying it could go up or it could go down, really great insight. When I specifically said, even if XRP makes another higher on the price chart, in my opinion, this momentum would eventually slow down, roll over, and we'd see a bigger correction for XRP before either continuing the uptrend or going down. So right now, the risk is a lot higher to be buying into XRP. I would be looking for short opportunities as this bearish divergence starts to play out a little bit more, or literally after I jump off this video, XRP starts to break down. So this is a likely scenario. And while over 90% of retail investors are buying into a crypto asset like XRP, Bitcoin, Ethereum, you name it, while the markets are going up, we're teaching our members technical analysis and how to short projects like this, $12,000 on a short on XRP, or nearly $25,000 in profit on a long on XRP. And as the Bureau of Labor Statistics is saying that the median weekly earnings of a full-time worker is $1,100. Well, obviously, I'm not going to guarantee that you're going to make $37,000 in profit, especially if you're brand new trading or you leave comments like these people right here who look at the charts and laugh and think it's not important. Well, those same people who think it's not important to learn technical analysis would take about 32 weeks or 8 months working for somebody else to produce the same results that took just a few days to long and short XRP. So in this video, I'm going to get into the charts and I'm going to explain what I see happening right now for Total 2, Tether's market cap dominance, gold and silver, global liquidity, XRP ETFs and what those are going to do to the price, and what Franklin Templeton's president has said about Bitcoin that you're not going to believe, plus some other valuable information that you need to know. So as always, it's not financial advice. Crypto's risky. You could definitely lose all of your money. In fact, most people do lose all of their money because they have no clue what they're doing. They just dive in, they invest their life savings, and then they panic sell the bottom. So you're smart, you understand that's possible, and I'm not guaranteeing that you're going to make any money. In fact, you'll probably lose money if you don't pay attention to what we teach, because I'm going to shoot it straight for you in this video. Whether you like what I say or don't like what I say, I don't care at all, because everyone's opinions don't pay my bills. And I expect you to feel the exact same way if you're building a business and people are sending messages to you, sharing their opinions, because opinions are like buttholes. Everyone's got one, and the majority of the time they're based on a foundation of crappy thinking. So we're going to focus on logic in this video rather than hype or the fear of missing out. So that way you can have a practical strategy, whether you're looking at XRP, Bitcoin, Ethereum, or any other altcoin for that matter. So as always, comment 777 if you're feeling blessed, if you're feeling bullish, and if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So by now, it is undeniable, it's non-debatable that massive institutions, Fortune 500, Fortune 50 companies, governments, billion-dollar and trillion-dollar companies are all diving in the crypto market. And now Franklin Templeton's president is saying this.
Bitcoin is the greatest distraction from the greatest disruption that is coming to financial services.
Now, it's one thing when a random troll in the comments on Twitter says something. It's another thing with a president of one of the world's largest global investment management firms with approximately $1.69 trillion in assets under management with clients in over 150 countries and a workforce of over 1,500 investment professionals. So what could the greatest disruption be that's coming to financial services? Well, could she be talking about ISO 20022, the global financial messaging standard that provides a new payment system for banks globally? And even on the SWIFT's website, they're saying the coexistence period for payment instructions is scheduled to end on the 22nd of November, 2025. We're talking about 10 days from right now. And simultaneously, this month, Apple just launched digital IDs in the United States, letting users add IDs like a passport to their Apple Wallet and use them at TSA checkpoints in 250 plus airports for domestic travel. And all around the same time, while 11 XRP ETF products have officially appeared in the DTCC website, including names like 21 Shares, ProShares, Bitwise, Canary Capital, and who else? Franklin Templeton. So what Franklin Templeton's president is talking about is the XRP ledger here, and what Ripple is doing to completely disrupt banking. Also, the NASDAQ has officially issued a listing notice for the spot XRP ETF, which is XRPC, and it says the effective date is November 13th, so tomorrow. So the fact of the matter is XRP ETFs have to be decided on. They're most likely going to be approved. If they're not approved, I would be very, very shocked. The ISO 222 standard is going to be global November 22nd. Now, I don't expect that to immediately impact price, although it could leading up to it. This is why we have to focus on the technicals and what's happening on XRP's price chart in this downtrend right now, because until you understand what I'm going to share with you by the end of this video, then you're forever going to be chasing news and you're going to be buying into the hype just like everyone in 2021 when Elon Musk was on Saturday Night Live or Mark Cuban was telling everyone to buy into like Dogecoin when we were all the way at the peak of the market and then we went into a bear market. So you do not want to miss this information I'm going to share with you. If you think charts aren't important and you're not making more than 6 figures per year, then just be quiet and pay attention right now, because if I don't have a 6-figure month, that's a bad month for me. And I'm not trying to be rude. I'm not trying to be pompous here, but I don't need to make these videos to make money. In fact, these videos don't actually make that much money. Here's the YouTube analytics. This one got 15,000 views and only made $135. But yet the video took me like 8 to 12 hours to make. So honestly, I would make more money just focusing all my time trading behind the scenes and not even making this content. Because economically, it just makes 0 sense for me to produce these videos with what I understand about how to look at charts that I'm going to teach you for free yet again in another video. So let's dive into the rest of the content. Global liquidity is one of the main things that we watch. Global liquidity has been surging. Now, on TradingView, if we type in M2 global liquidity here, and we just pair it up on Bitcoin's price chart, you can see there's been a little bit of an offset between the peaks here in global liquidity since roughly the 1st of October here of over 70 days. And so usually what happens here is global liquidity in yellow moves first, and then that liquidity catches up to riskier assets like crypto assets, right? So you can see after COVID happened in March, global liquidity absolutely exploded, and it took a while for Bitcoin to get out of here. And then it wasn't until October, November, and December that then Bitcoin caught up with global liquidity. So global liquidity off of 2022's low exploded to the upside. And then you could see here, Bitcoin broke off of the bear market low and started to catch up to global liquidity. So every single time we've seen an expansion in global liquidity, shortly after that, we've seen an expansion in the price of Bitcoin and the rest of the crypto market. Now it's interesting here because ever since the 12th of January, global liquidity has continued to go up, but yet Bitcoin at first went up with it and has now been pulling back in the short term, causing a lot of panic in the market for people to think that this bull market is completely over. So I'm not here to decisively tell you either scenario here because I'd just be lying to you to say if I had the answer, but I'm going to share with you the strategies that you can be able to deploy to make money regardless of whatever happens. And if that's okay with you, then like this video, subscribe to the channel, because here's the next thing that I look for. Regardless of whether the top is in or not, currently the top for Bitcoin is $125,000. It doesn't matter if we pass that or not to make money in these markets, because you can long and you can short Bitcoin and different altcoins based on different time frames. Because right now I'm on the daily chart, and if I pull up the relative strength index and the stochastic RSI, you can see on the price chart, while Bitcoin has been putting in lower highs and lower lows in this falling wedge here, the relative strength index has been putting in lower lows and lower highs. And one of the main things that I like to look for on the relative strength index is a divergence between the price action and these key indicators. And so while we're in a downtrend like this, what I would want to look for is lower lows on the price chart, which we are seeing here, but I would want to see the relative strength index diverting in an opposite direction to put in higher lows. And we're just not seeing that right now on the daily chart. So that is sign number one, that the momentum is just stronger to the downside. We're not yet ready for a reversal back to the upside just yet. So what I do then is I go into smaller time frames to see when a reversal is more likely. So we're going to go into the 4-hour chart. Now, every time you go into a different time frame, your trend lines are going to change because these indicators moved based on whatever time frame you're at. But your trend lines on the price chart should be relatively the same. If you need to move them a little bit, you can do that. But as you can see, it's pretty spot on with these lows right here. So what I would want to look for is the lowest low on the relative strength index. And then I just put a vertical line. So that's right here on the 11th of October. Then what I do is I take a trend line, I connect it from that low to the next low on the RSI, and I see if we're putting in higher lows, which we are. So we are seeing a bullish divergence forming on the relative strength index to the price chart. And I've covered this in previous videos. If you guys don't know what a bullish divergence is, then click the link in the description below. Join the Altcoin Pro Accelerator program. I do calls every single Monday that go anywhere from an hour to 2 hours, sometimes even 3 hours long. I mean, my most recent call was like 3 hours and 2 minutes long. So my goal is to be able to teach you guys these skills so you could be able to master them. And if we look at the most recent lowest low on the relative strength index in the price chart to see if we can spot a bullish divergence since the 4th of November, we can connect these lows on the RSI. I'll connect the lows on the price chart. And as you can see, we're not putting in lower lows on the price chart, whereas we're putting in higher lows on the RSI. So this isn't a bullish divergence on the 4-hour price chart, which tells me that the selling is not yet done for Bitcoin, and we're more than likely going to break to the downside as a higher probability. Now, that's not a guarantee, obviously, and I know that triggers a lot of people to leave comments like this saying it could go up or it could go down. Really great insight. But when I see stuff like this, it tells me that there's a higher likelihood of the price breaking down. So if it breaks to the upside, then before you enter into any trade, you need confirmation on price action. And what that would be a break of resistance and holding it as support to show that this downtrend is done and we are going to go into an uptrend. So we're still in a downtrend right now, a series of lower highs and lower lows. The main resistance to watch is right here at roughly $106,000 because, as you can see, it's acted as support since the 17th of October until we broke below it right here on the 4th of November. Multiple points of contact, and then it rallied back up into it as resistance. So unless price breaks this, then the selling pressure is just going to be strong to the downside. Even if we rally up a little bit further in the short term, the likelihood that we continue down for Bitcoin is higher than continuing up. Now, obviously, it's not a guarantee. Markets can be unpredictable, but based on that alone, logically, that just tells me to be more bearish right now and not long any projects until you see this bullish divergence play out a little bit more. So because this is not a strong bullish divergence where the price chart is making very clear lower lows and the relative strength index making higher lows, because we're not seeing that right now, I would want to see Bitcoin's price crash down to like $97,000 or $98,000 and do something like this before I get more bullish. But for further confluence, I'll go into the hour chart and we'll see if we can spot a bullish divergence. So we'll look at the lowest low on the relative strength index on the 3rd of November. We'll just connect the lows here to the 7th of November and you can clearly see price chart made a lower low. So this is a bullish divergence right here. And then the price chart starts to now put in higher lows alongside the relative strength index. But a major key that I like to look for is the RSI holding between 30 and 50. I don't like to see it going below 30 while we're putting in higher lows. I want to see it holding between 30 and 50, putting in higher lows, and then the price chart to start putting in higher lows as well, and then a break of structure. So the break of structure would be resistance, like I just mentioned, on the higher time frame here, and that's roughly right around here. So what I want to see first and foremost is this support to hold where we're roughly at right now. Otherwise, if we break below $99,000, it could get ugly to the downside. I also want to see some bullish momentum back to the upside here, and I want to see it holding on top of resistance as support. This is what I look for here. And then I zoom out and I weigh the risk to reward here with the long position tool, depending on where the price is at. So if you have to wait a little bit, well, that's fine. You need to learn some patience here. And also learning how to set proper stop losses and take profits too is really important because you at least want 2-to-1 risk to reward ratios. And you want to see where that puts you based on previous support and resistances. So for a 2-to-1 risk to reward ratio, if Bitcoin starts holding on top of, $106,000, price would need to go all the way up to $122,000 for a 2-to-1 risk to reward. Now, I'm not going to get too much into the nitty gritty detail of that right now because we're not there yet. We have to see how the price action plays out over the next 24 hours. And if you guys want to learn more about that, you can simply just go into the classroom here inside of Altcoin Pro, scroll down to the technical analysis essentials, run through all 28 of these videos here, and you'll get, I think, like 20 plus hours of education there on how to read charts. Because you can do this with any asset. You can even do this with gold and silver. On the left-hand side of the screen, we see gold. On the right-hand side of the screen, we see silver on the hourly chart. Now, gold and silver have started to break out again, and it's marching back up to its previous high. Silver's rallying a little bit harder than gold, which is actually a really good sign because I bought a lot of silver back in 2022 because of what I was seeing on the weekly chart. All the way back here in September of 2022, I saw a bullish divergence playing out because the relative strength index bottomed out down here at 28 on the weekly chart. And then you can see the price chart put in a lower low, whereas the relative strength index put in a higher low between 30 and 50. It bottomed out right here at 33. So this was a sign to me that the bearish momentum to the downside from these lower lows and these lower highs was slowing down, and eventually there was going to be a reversal back to the upside. So I went out and I bought as much silver as humanly possible during this recovery right here on these dips, and have just been holding ever since. So that was roughly between $20 and $30, and now silver's at $53. And I did the same thing for gold. And now look at gold, it's over $4,000 an ounce. So is this rally for gold and silver done? Not necessarily. If we look at this uptrend right here and we just connect the highs, we go to the relative strength index, we connect the highs, you can see it's the start of a bearish divergence. Now, for a bearish divergence, what I want to look for a trend reversal would be for the relative strength index to obviously be putting in lower highs. But what I want to see is I want to see it fail to reclaim 70 in a downtrend here. So just like on a bullish divergence on the opposite, I want the chart to then hold above 30 to 50. On the opposite, which is a bearish divergence, I want the highs to fail to reclaim 70 and stay between 50 and 70 to show that the momentum is slowing down. So yeah, there could be a short-term pullback for gold, back down to this previous resistance, but I would expect, honestly, this uptrend to continue here until I see this start to take place on the relative strength index, where the highs fail to reclaim 70, and then the momentum starts to slow down on the upside. Then we see a much bigger correction for gold on the hourly chart. So we're still in an uptrend here. We haven't broken this uptrend for gold, and I think it's going to continue alongside silver. Silver's about ready to break out and do a new high again. Also, a Bitcoin death cross is about to happen soon. The last 3 death crosses marked the bottom within a week, and then Bitcoin pumped to new all-time highs. So something to note there. If we look at Tether's market cap dominance, which basically shows what percentage of the whole entire industry Tether has in market cap, you can even check this on coinmarketcap.com. You can see the whole entire industry is $3.4 trillion. So Tether having $183 billion means that the market cap dominance is about 5.4% of the whole entire industry. And also, you can look at the relative strength index and the stochastic RSI, and you can spot these same type of divergences to see when the likelihood of Tether's market cap dominance is of rolling around to the downside. So right now, we can clearly see that Tether's market cap dominance has been in an uptrend ever since we broke this resistance right here, and we just started putting in higher highs and higher lows. So in this uptrend, in this bullish channel here, what we want to look for is first and foremost the highest high on the relative strength index. So that's right here, the 4th of November. And we want to match it up on the price chart, and we can clearly see, that's the highest high in this uptrend right here for Tether's market cap dominance. So if I can't see a bearish divergence, which is higher highs on the price chart and lower highs on the relative strength index, then I'll go into the shorter time frames. Right now we're on the daily, so then next I'll go into the 4-hour. There's no bearish divergence on the daily. So I want to look to see if I can spot a bearish divergence on the 4-hour. If I can't spot that, I'll go into the 1-hour time frame. And if I can't spot it on the 1-hour time frame, then that tells me that the momentum is still strong to the upside for Tether's dominance, and we're going to continuously see some bleeding for altcoins. So then before I get into the XRP price chart, this is important to note because you need to understand what's happening with stable coins. Because if money's flowing out of altcoins into stable coins and you're not seeing the momentum slowing down for Tether's market cap dominance, then you just want to err on the side of caution here. So looking at the relative strength index, we can see the highest high here at 79. We can clearly see lower highs, but if I look at the price chart here, we can just see lower highs here, and it's just matching up the price chart with the RSI. So we're not seeing a bearish divergence on the 4-hour. So we'll go into the 1-hour. Now, just on the naked eye here, I can see a bearish divergence looking at the recent highest high and the relative strength index here at the bottom of the screen. So we connect the highest high and the RSI to these lower highs here, and you can clearly see this downtrend on the relative strength index. And so we'll look at the price chart, and you can clearly see that it was forming higher highs. So this right here is a bearish divergence. Now, the problem with this right now is this was the 4th of November. This move has more than likely already played out, and now we're starting a brand new uptrend after this short-term downtrend right here. And so this is a nuanced point here, and I'll explain why. Because we saw the relative strength index putting in lower highs and then fail to reclaim 70 right here, like I just mentioned, and also right here on the 8th of November and the 9th of November, this is exactly what I look for a trend reversal to take place. We are in an uptrend. We see a pullback, and then we see the price chart fail to put in a new high. Then it starts to put in lower highs here, and then we see a much bigger pullback before we start a new uptrend here, or we eventually see a trend reversal. So to understand when this new uptrend is going to stop here, we look for the same thing. We look for bearish divergences. So we look at the highest high on the relative strength index. It's right here at 72. We can see the RSI putting in a lower high. If we just zoom in here, And on the price chart, you can clearly see the higher highs here. So this is technically a bearish divergence. But just because you see a bearish divergence taking place doesn't mean the price just comes down right away. It can play out for a period of time, as I've shown you guys on Bitcoin's market cap dominance over the course of a year or two. But this is just the first sign that momentum is slowing down. And so pushing a little bit higher for Tether's market cap dominance is a possibility. And if the RSI puts in another lower high and fails to reclaim 70, then it's very likely that we experience a much bigger pullback in Tether's market cap dominance, potentially back down to 5.25% or a little bit higher, because technically we still are in this uptrend since yesterday for the dominance. So I expect us to hold this channel, but we're going to watch the RSI here to see where it tops out at in the short term. Also, the stochastic RSI is at 76 and 72. We just formed a bearish cross right here. And if we switch for a second from Tether's market cap dominance on the hourly chart to total 2 on the hourly chart, you can see while Tether's dominance here is in the short-term uptrend since yesterday, total 2 is in a short-term downtrend since yesterday, because as you already know, if liquidity is flowing out of altcoins, it's either flowing into Bitcoin, stable coins, or something else like precious metals or the US dollar. So because we're in this short-term downtrend for total 2 here, forming lower highs and lower lows, we then apply the same principles here, looking for a bullish divergence on the opposite end. So you can clearly see this lower low right here in the price chart. We can see higher lows on the relative strength index. So this is the start of a bullish divergence, which is a great sign of bearish momentum slowing down. It doesn't mean the momentum is done though, because we're still in this downtrend. We need to see a break of structure. Now the challenge here for total 2 is that break of structure and the resistance is all the way up here at $1.4 trillion. So there would need to be an aggressive move for altcoins here in order to break this downtrend. Otherwise, the selling pressure is just going to remain a little bit stronger to the downside, while Tether's market cap dominance has this bearish divergence play out a little bit longer to the upside before rolling over to the downside. So that just means there's a higher likelihood right now of altcoins selling off while Tether's dominance goes up in the short term until we see this structure change. And what that looks like is what I just mentioned, clearing of resistance, like what we've seen right here, coming back down to hold it as support and then reversing to the upside in an uptrend. So right now, we're just simply in this downtrend. You can clearly see this. This is non-debatable here. We would then need to see resistance flip and hold as support to then see a much more macro trend reversal. Otherwise, we're just going to continue going sideways or down with these short-term retracement rallies. So when you're in doubt here on what's going to happen next, just zoom out and look at the macro picture, and that'll give you a better gauge of what's happening. So by no means is this bullish right now. You can see we got rejected from this descending resistance, and we're in a very clear downtrend here with lower lows and lower highs for total 2 as well. But this is nothing new. We've been here before. As you can see, we were here back from December 2024 until April of 2025, forming very clear lower highs and lower lows until we saw some sign of strength here. And then we broke out and we cleared a previous resistance. And then we pull back to back test it as support. And then we continue higher. So until we clear like $1.43 or $1.44 trillion, we're just going to continue selling off for altcoins. So we need to see this level clear, hold it as support. And then we need to see this downtrend end on the relative strength index here, like what happened all the way back here from the end of April until early May of 2025 when the RSI reclaimed 50. So during a downtrend, we spend the majority of the time below 50, and then during an uptrend, we spend the majority of the time above 50. So right now we are below 50 on the relative strength index. I want to see the RSI reclaim 50, and also I want to see something like this happen here. And I think that could come in December, but I think over the next week or two, we might be a little bearish here. Now, in the short term, though, we could see these temporary relief rallies, when we're in these oversold conditions. Like on the stochastic RSI for Bitcoin, we're at 12 and 3. We're down here in oversold conditions. So eventually, Bitcoin would experience a little short-term bounce. But again, remember, we're in a downtrend right here. So until we see a break of this resistance all the way up at $106,000, Bitcoin is likely to just stay in this downtrend. And you can make money shorting the market in these retracement rallies. Now, if you want to make a lot of money in the crypto market, you need a lot of leverage to be able to place bigger trades. And if you don't have a lot of money, then it's difficult to do that unless you have a portfolio that's 6 figures or higher. So I have a very important question for you. What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with 0 of my own money on the line. I just paid a one-time evaluation fee to take a trading test, and that's it. And we've been getting flooded with messages of people asking us, how do I get crypto loans? How do I leverage trade without risking my own capital? And that's exactly why we partnered with Breakout, the sponsor of today's video, a crypto prop trading firm recently acquired by cryptocurrency exchange Kraken with over 10 million clients in 190 countries, processing billions of dollars in trading volume and over 1.5 billion in 2024 and over 15 billion in 2025 in revenue. They'll fund you up to $200,000 for passing one simple trading test. And if you pass the test, you get to keep up to 90% of the profits on your trading account. and you get to withdraw your profits anytime after you pass the test. Now, here's the problem that I see most people face when they get started in crypto. They go to an exchange like Coinbase or Binance.com, and they just start trading with, let's say, $10,000 of their own money. And that's not a small amount of money for most people. That's your mortgage payment, that's food, that's electricity, that's your rent. So one bad trade or one black swan event, like what happened at the beginning of October where altcoins saw the biggest liquidation event in history, then poof, your account could be completely blown or go to zero. And then your rent's late, your savings is completely wiped out, your family is stressed out. So you're not trading to win. Trading with your own money is survival. Whereas trading $100,000 of risk-free capital is freedom. In fact, if all you have is $10,000, you should never be trading with all of that in the first place. The smartest move that you could possibly do is take just 10% of that, which is $1,000, and start trading with Breakouts Capital, which is acquired by Kraken. And all you have to do is pay for a simple trading test for a 100K account or a 200K account. And if you pass the test, then you're able to trade with 6 figures without depositing or risking any of your own money. And let's say you fail the test, well, you only lose the cost that it took to take the test rather than a full $10,000, because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple little $1,000 test. And the best part here is there's no limit on retries. So when you click the link in the description below and you want to get funded for a 100K account like what I did, well, it only costs $1,000 here. And the best part is there's no limit on retries. And so that's 10x better risk management here. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use, and that's OPM, other people's money. So what I'll do for you is I'll leave a link in the description below. It'll take you to this page right here, and all you have to do is click the button that says Start Trading. And what I did was select the classic 100K funded account. Then you simply enter in your details to create your account, select the account balance. I'd recommend going with 100K. The account type is one step, the plan is classic. And if you enter in the affiliate code 777 on your checkout, it'll give you the maximum discount. And then check the box that says 90 to 10% profit split, because it's only $100 extra and it pays for itself in your first payout. So if you skip it, you're only getting 80% of the profit split. So that extra 10% on the table is well worth it. Then you simply purchase the test. You'll get $100,000 loaded in your account. And then the profit target to pass the test is $110,000. So you just have to grow the account by 10% with an unlimited time frame. There's no deadline here. And just keep your account within a max daily loss of 4%. That'd be like $4,000 and a max drawdown of $6,000. And then you can withdraw your profits on demand 24/7 in USDC. Now, quick disclaimer, when you go through the link below and you use code 777 to get the maximum discount on your 100K or 200K funded account test, we do earn a small commission, but it helps support value-based videos like this. So click the link below in the description right now, take the test, and let's get you funded.